Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. This is a very important week because it is a high impact news week. A lot of the information that's going to come out this week may nudge the Federal Reserve in one direction or another as they're coming into their November meeting. First, we have the PPI, the Producer Price Index, coming out on Wednesday. And also we have the Federal Reserve's meeting minutes from their previous meeting being released. So why is this important? Well, this gives us a front row seat as to the details they were discussing at their last meeting. That, remember, they came forward with their rate decision and they gave their press conference, but the details of that meeting give us more insight as to what their ideas are, where they think we're at, and how far they think they have to go before we start seeing the results that they're looking for. So for a lot of things, the meeting minutes actually serve as confirmation of what you see already happening in the marketplace, but people are going to be looking for forward guidance on what they think that means for November's decision and looking into 2023. Next, we have CPI, the Consumer Price Index, coming out on Thursday, and this one is a biggie. Remember, it was 9.1% in July, it was 8.5% in August, it was 8.3% in September, and they're forecasting it to be 8.1% when this number comes out on Thursday. So why is this a big deal? Remember how we talked about the rate of inflation change being important? Well, the move from 9.1% to 8.5 is pretty good. 8.5 to 8.3, not as fast. And 8.3 to a projected 8.1 is just a continuation of that slower rate of inflation change. Now remember, we've been talking about the Fed's stated goal of tamping down inflation to that 2% mark, and they are pegging their progress on the Core PCE number, which 2 weeks ago actually went up, which means that this week's reading of CPI is going to either conflict or correlate with that Core PCE number going back up, and that's going to give us a real key insight as to where the health of our economy is right now. So the primary question is, well, was the Core PCE number going up a fluke? Or is the CPI number going back up too going to confirm that we're going in the wrong direction? We're watching this super closely because I predict this is going to weigh heavily on their decision in November and whether or not the Fed thinks they can lift their foot off the gas pedal a little bit. Currently, all projections are that a 75 basis point move is still on the horizon for the November meeting. Until we get this CPI number out, we're not really going to be able to figure out where this piece fits in the overall puzzle because 75 basis points is honestly called for, and there's enough room on the runway for them to make that type of rate hike. But the CPI number mixed with the miss on Core PCE 2 weeks ago is actually going to be a really, really big deal. And finally, on Friday, we're looking at two things. Number one, you're looking at retail sales numbers. And number two, you're looking at consumer sentiment. Now, those do go a little bit hand in hand together. But again, where does this little block fit in the overall economic picture when it comes to how consumers are spending money? Now, while sentiment may not be that big of a factor when it comes to the actual data and fundamentals of the marketplace, it does give us some insight as to where the consumer is right now relative to the time of year, because we're about to come into the spend all the money you can for all the things you can for all the things you want season, otherwise called the holidays. So at the end of the week, watch for that number two. Well, what does all this have to do with mortgage rates, Andy? Well, last week, mortgage rates came under heavy pressure again because really there's just no argument for a downside or decline in mortgage rates. As I've been saying for weeks, we are still in an upward trend with days where there's relief and there's a little pressure that's taken off the system by days where there's dips in rates. Those are going to be days, those are going to be moments, those are not our general trend direction changing for the better long term. And really, until there's some sort of fundamental change that the market can sink its teeth into, this is what we're going to continue to expect in quarter four going towards the end of this year. The mix of the basket of results we're going to get this week, coupled with the activity on the pricing market when it comes to mortgage-backed securities, is going to tell the tale for the remainder of quarter four and looking to 2023. So those of you that have a scheduled move into San Diego for 2023 or out of San Diego for 2023, we are advising everyone to get started right now. Understand the context of the situation personally, matched with what the market is offering you today, so that as you're planning your move in 2023 here or out of here, you are adequately prepared to make the right choice and to time it as best as possible. In a marketplace where everything is moving very quickly, there's lots of volatility, there's lots of uncertainty, and the general direction of where we go next is still not known, it is to your advantage to start right now and today so that when you get 3 months down the line, 6 months, 9 months down the line, you are best prepared to strike when the iron's hot. For those of you that still have a lot of equity in your home and you do not yet have a home equity line of credit, you can learn more about that by watching this video right here on YouTube. We've also been talking about accessory dwelling units quite a bit recently. If you missed that video, we recently made an update you can watch right here where we talked about the ADU grant being moved from $25,000 to $40,000. And our sentiment is that there's probably going to be more of this in the future as we try to fight our demand for housing, the lack of supply that needs to be met in the marketplace, and the current program is going to run out of spots pretty quickly, which means they're going to have to open up more in 2023 and possibly even 2024. Lastly, I want to acknowledge that I know that over these last couple of weeks and months, I've had to be the delivery person of a lot of tough and difficult news that we have to digest and understand in a rapidly changing market. And I want to remind you that we've all been doing this together since 2005. So we had a front row seat to everything that happened leading up to 2008 and 9, getting out of 2008 and 9, recovering all the way into today. So we have firsthand experience of what it's like to work in difficult and challenging marketplaces where there is uncertainty, there's lots of volatility, and the general direction and understanding of what happens next is unsure. I say that because I want to make sure that you understand we're citing actual data in the marketplace and we're not just putting a negative, pessimistic spin on what we see happening. These things are really occurring in the marketplace, and it's important for us to be honest and candid with you about them so that you can best prepare your family to win in mortgage and real estate in 2022, but also in 2023, 2024, and onwards. So this is our invitation. Connect with me, connect with Memo, connect with Brian. Reach out to us if you have a situation or a circumstance you're not sure about what you should be doing. Please raise your hand and tell us you need help now. Do not wait until it's too late for us to actually be able to help you. To stay, you might need help. So even if it feels inconvenient, even if it feels uncomfortable, even if you're not even sure if you should ask anyways. It doesn't cost you anything to ask us questions. It doesn't cost you anything to get our opinion and our advice on what you might need to consider in this season ending 2022 and looking forward into 2023. As always, please like this video, share this video. Remember to subscribe to our YouTube channel and turn on your notifications so that you get notified every time we drop a new video first. We do post all our videos to YouTube first and then to social media and then to our newsletter. So if you want to get all the information relevant to the marketplace firsthand first, then you want to make sure you subscribe to YouTube and turn on those notifications. Thank you so much for watching. I hope you have a great week and we'll see you again next week.